Hello, and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 9th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data in the form of anything across the pond. We did get challenger job cuts here in the United States at negative 40%, which is good for the economy. Means less people are getting laid off. And then we also came up with unemployment claims right in line with expectations at 243,000. It's expected to be right around 240, so just slightly better than expected there, or actually slightly worse than expected there. Higher claims means higher people looking, but we're starting to see more hiring going on, so that's not necessarily a bad thing. It means that people are coming off of the discouraged workers list. It just means they're starting to look again. And then we also got natural gas storage come in at 68 billion cubic feet. Drawdown was expected to be 59 cubic feet drawdown, so a little bit more demand than what was expected there. On the overall markets, as I talked about this yesterday, the target was looking like a very soft line in the sand, being right here at this level here, right where that last candle was. But then today, for the most part, we were trading right around this $49.50 area that I had talked about being a target if the overall market started to slide. So today settled down there, but as the day goes on, we're starting to see some renewed bearishness in crude oil. And the next target, if we look at like a Fibonacci level, we could computer's not going to really want to play for it right now. There we go. So if we kind of throw a Fibonacci on here real quick, just kind of a dirty Fibonacci, the 38% retracement here is going to be right here at around $47.50 ish. It's not really lining up with the market profile necessarily, but you can see most of the other ones are lining up pretty good. The next target, if it blasts through that, which is kind of not even looked at Fibonacci's on the way down, would be the point of control, which is the 50% Fibonacci, just coincidentally. So right there at the $45.87, let's call it $46, could be the next target on crude oil if we continue to see this slide. With all of this oil out there, lack of demand, I could easily see that happening, but definitely looking at this $47.60 as a line in the sand to go after. Looks like it's kind of unabated at this point. We could see that happening rather quickly. Then on to gold futures. Of course, they continue to slide. Equities aren't really making a whole lot of moves today, and gold isn't really going to react necessarily to the crude oil, but gold down on the day by just over $5, and really looking for this 1185 area that I talked about. This is going to act as support right here at this 2000. We came down there and kind of touched on it. Keep in mind that is a psychological level. The bulls are going to want to try and hold, so it is going to act as a support and resistance anytime we get around those hold numbers that are really just arbitrary numbers, if you will, but the market sees those as value. Then bonds continuing to slide as economic picture is starting to look pretty decent. We got unemployment claims a little bit higher. Everybody's kind of expecting the non-farm payrolls number to be pretty good. So bonds really at their 52-week low today, and it doesn't look like there's a lack of volume necessarily. We're actually starting to see some volume pick up, so bonds continuing to slide right now. Then on to the Dow Jones Industrial Average. It's kind of still tightened up from yesterday. We haven't really covered that gap as of yet, but I guess we did cover that gap. Sorry. Looks like we've covered that gap, so that has been accomplished, giving the Dow just a little bit of room to the upside with up just 5 points on the day. So all of the equity markets, for the most part, have covered those gaps. So that is an objective achieved. So if you took that as a short, this would be a time to kind of start thinning out, especially with the unemployment number tomorrow, which, if you remember last Friday, I thought it being the first Friday of the month, we were going to have the unenjoyment, but they moved it back because it was a shorter week, not enough time to compile that data heading into that first Friday of the month. So tomorrow is going to be the unenjoyment number, and that's what we used to call it on the floor, because those were the days when the market was really crazy. So a lot of brokers and traders usually look forward to it. Brokers not necessarily, but it did get coined the name of unenjoyment on the floor. But we've achieved that objective. So Dow Jones is primed to go either way, despite the fact that we are just slightly below that 9-day moving average. So a little bit of bearishness still. We got the NASDAQ just up 2 points on the day for the most part, really pretty quiet. Everybody kind of shoring up those positions ahead of that number, because the non-farm payrolls number will be released before the equities can open. So nobody wants to kind of go into that number after the end of today's session with any positions that are not hedged. Then on to the E-mini S&Ps. Again, they're up just slightly on the day. Pretty quiet day for the most part. Pretty low volume already today, but we are starting to build a volume node here. It's not really enough to write home about, but if the market comes off, that will act as a resistance, and if we kind of pull away from that, that will act as support again. But again, if we get much lower than this little retracement area where there wasn't very much volume going on could easily slam down to what is that, 2289, or just slightly lower than that, which is probably a more of a support level, which is 2262. So if we get much lower, we're going to start seeing this market precipitously want to head for those targets. This is the breakdown 30-minute chart of the E-mini S&Ps 10 days. As you can see, we are below the point of control for time, but we're consistently seeing this step down in the point of controls. Yesterday was kind of a breather, but today, again, overlapping, but the point of control just slightly lower. If it ends up outside to the downside here, it could be very bearish for the E-mini S&Ps, despite what number comes out tomorrow. So unless it's really, if it's in line, I could see this continue to go down. If it's super aggressive where really looks good, market could throw a little bit of a tantrum, knowing that maybe the Fed's going to increase 50 basis points. So if that starts becoming the mantra or the feeling in the market that the Fed is going to be much more aggressive, then we could see a little bit of a tantrum being thrown in the overall equities with the S&P and the broader market. For that most part, bonds would probably get slammed and equities could go down. That would be one of those rare occasions where we see the bonds go down and equities at the same time. So this MRK trade, I got a signal yesterday during the market commentary that I thought I got my MRK trade. Didn't actually happen. So MRK, I haven't done anything in. Just wanted to keep you guys updated on that. That MRK trade that I thought happened when I got that signal was actually just a futures trade that I was trying to get out of. So that ding was for that, and I don't usually talk about those in the daily market commentary. I usually just trade futures to kind of keep active in the markets, especially when it's difficult to find something to trade, which it has been lately. So I've been playing around with some futures, especially with these when they're lining up with the market profile. Then with Halliburton, so Halliburton's really starting to slide, gaining steam to the downside. We've gone down and settled below, or not necessarily settled, but we've broken below this point of control. So just like I was talking about, anytime you see these troughs here, that's where you start seeing a little bit of market momentum pick up, and they just kind of breeze over those low area nodes, if you will. And now that we're through this value area high, I'm looking for the market to continue down and maybe start catching a couple breathers here and there, but a profit target of, it wanting to go to the value area, the point of control, which is where the most volume and time has been spent for this market over the last 52 weeks. I think that that's looking like a pretty good scenario. So decided to put on a long put spread in there. I went into the May and bought the 55 puts and sold the 45 puts to create that spread, covered the extrinsic value right in line with those rules that I came up with for the long put spread that I just did last Friday, and I paid $4.97. Now I did that pretty small because it's right in the beginning of this whole development of a sell-off, so did a pretty small, maybe incrementally add to that, we'll have to see, but did fall right in line with my rules for that one. So tomorrow we're going to be doing a webinar on a little twist on the long call spread. So I'm going to add a little bit more risk to this, be able to get a credit for this spread, and it's kind of like along the lines of what we did with the broken wing butterfly. Added a little bit of risk to that and limit some of our overall risk, or our overall debit that we're going to pay. We're going to actually be trying to set this up to get a credit. So we're going to show you how to build that out tomorrow. So go to protraderstrategies.com, sign up for that. And if you can't do that, take it easy.